The floor is yours.
Thank you very much. Good afternoon, ladies. It's Adeswa's thing to tell people's ladies' age at the beginning of their pitch. I mean, it would have been lovely for you not to know my age until the end. However, she has let the cat out of the basket. I wish to thank First Bank, not just for inviting me, but for putting up this regular training. I call it training because you come and you don't realize you are actually being trained. If you had to pay for some of the things you get from here, you would go for a 2-day course and it will set you back quite a bit of money. So I wish to thank First Bank for helping our ladies. And I would like to thank all of you, because for you to have taken time off and been here since morning, it means you're also learning people. I like learning people. Many people believe that they don't have anything to learn, and that is a problem in itself. So say congratulations to yourselves. Very good. Now, I run a company that is an investment company. I have run it since, by the way, I own up. I'm also a First Bank alumna. Yeah, because when I left First Bank in 2002, I started running this investment company, and I have run it since then. And for many years, our investments were mostly real estate. And we developed at a stage, and then we started just trading real estate, because when we would have board meetings, they would say, where is the economy at today? What is the economy of today? Where is there to make money today? So about 3 years ago, it was decided that we were 70% assets in real estate. So it was decided to dedicate 10% of our net value to investing in small businesses, startups, scale-ups, SMEs. And therefore, my KPI became looking for investable businesses. And a capital was dedicated to that. There was a budget for it. And so the first thing I'd like you to remove from your mind is that there is a shortage of capital, because there's no shortage of capital. Apart from the company I work for, I will tell you some of the associations I'm in that are doing nothing but looking for investable businesses. So there is no, just like you think you're out there always looking for someone to invest in your business capital, there are capital owners and investors who are scouting all the time and looking for investable businesses. And the mystery is trying to match both. And the mystery is hard on the investor. Before I go to the gender issue, I would say that the biggest mystery is the fact that what the investor wants, or why the investor wants to invest, unfortunately, most of the time, the small businesses don't understand that they have to pander to that. Nobody is going to give you money just because you want money. A few people come to me, auntie, come and invest in my business. And I ask a couple of questions, and I'm thinking, that's your own objective. You haven't even talked about my objective. So the investor usually has an objective that they are trying to meet. For me, I'm trying to meet my KPI. Let me tell you what my KPI is. A budget has been given. 4 areas, 4 industries have been identified in which to put money. So it's not a surprise that you have all these bank and eventful souks and food fairs. So we did identify the areas of the economy that was going to make money, and in which we don't want to go and roll up our sleeves and work in. We would rather find those who know it, who do it well, and who we can invest in to make sure that we get the kind of returns we're looking for. So my KPI included 4 sectors. One is food, one is fashion, one is technology, so we're looking for our own Facebook or Apple, and the 4th is financial inclusion. Up to date, I have found food. Sorry, I didn't find food. Food found me. Because I went about it, I couldn't identify who. It wasn't going to be the caterers, it was food in a deeper sense of food. So luckily for me, a food company, always there, wanted to scale up, and the private equity that was already invested in them then contacted some, we have investor groups, I'll tell you about them. So they contacted our investor group and asked us to buy loan notes convertible to shares. And we did that about 2 years ago, and the loans are now being converted to shares. So food found me. I couldn't find the food. Then I was looking for fashion. I thought I could go it alone, so I looked for fashion. I asked people if I bought clothes that I liked and those that I had bought from before. I started trying to talk business with them apart from fashion, and I found out that it was just not easy. They only wanted to talk fashion and small businesses, and just not understanding what the investor needs. So I withdrew and I went back into the investor groups. I say investor groups, you might have heard about LAN, Lagos Angel Investors Network. There's the Rising Tide. Around this room, can I ask the question, how many ladies have made pitches to investor groups? I can see 2 hands. 1, 2, 3, 4 hands. 5. In this room of almost 1,000. The biggest problem I personally have had is that females just don't turn up at the pitches. Is it because they don't know about such pitches, or is it because they don't know that there are investor groups, or is it because they are afraid to put themselves through the discipline of pitching? It has to be one of those. But Lagos is a small group in the end. So to tell me that you don't know about the investor groups, I wouldn't really believe. It must be that the ladies believe that it's not going to be their way of finding capital. So I wanted to paint that background so that when I go ahead, you know that there's capital sitting out there looking for home, looking for investable businesses, but they would not do it without certain conditions and without promise of return. They're not Father Christmas. So I'm using slides because Mrs. Awoshuka is not here, the chairman. I had spoken about scaling for her at another venue, and then she'd asked at this time for me to expand the scaling and talk about what investors want. So she said, speak to that slide. So I am going to use slides. I believe that 90% of people do better with what they see than what they hear. So I like slides too. And hopefully First Bank will be kind to give you the slides after the event. Yes, Fam? Good. So financing scale up. And I will talk about the fact that we all are not at the stage of scale up yet. Some of us are just starting out. And I'll tell you what not to expect at that stage and what to expect. Because sometimes if you're asking for what is just not available, then you're asking wrong. So, I'm not sure it's working. All right, so the financing life of a business. The first person that really puts money into a business is the founder. Whether it's your little savings or family or whatever, you're the first one, hopefully, that trusts your business idea enough to put money. This is not working. It's flipping. Okay, I have my slides in hard copy. I always carry it in hard copy, knowing that it might not work. So the first lot of people, okay, so is family, friends, and fools. We call them the 3 Fs. Family, because they're just your family. Friends, because they just want to keep you as a friend. When you start asking for money, they give it to you. And then fools, who honestly don't know what they're investing in sometimes, but when you tell them the idea, they give you money anyway. And so we call them the 3 Fs. It's family, friends, and fools. And then from there, you go to the grants and the banks. A lot of you, I think, are getting money from First Bank and BOI. So you're probably at that stage. Gosh. I'm not. I've put my hand on one, so it goes, you know. Yeah, I'm not moving my hand from there. So, grants and banks, and then the next lot are the angel investors. And that is the first time you need to know what they want. Because with yourself, family, friends, not really. Banks and grants, if there's an interest rate, you pay it. That's it. They're not asking deeply into your business. They really are just, giving you money. They are in the business of lending money, and so they will give you money. And, hopefully you keep to your covenant. Angels, venture capital, and growth capital. That is when it is money from people who don't know you and who don't care what you think. They have their own KPIs. They want to invest for a return. They have ways of checking that their investment will bring return. And it is those things they think about when you ask them for money that I'm going to share with you today. So if you and I met, you will understand the fact that I have my own KPIs and I know what I'm looking for. And even if I spoke to you for 3 minutes, I probably will cover all those areas without your knowing. Because if I ask a question and you tell me 3 sentences, I can tell whether you understand that I need an exit at some point. I will understand whether you have an intention to even scale up at all. So there are things I will quickly find out in 5 minutes, but which you do not know I'm searching for while I ask my basic questions. So today, I would share some of them with you. A lot of you in this room, I can imagine that you're in the 1, 2, 3, 4, probably 5th stage. The growth capital is bigger money. You start looking for, people who would put serious money into your business. And that is when venture capitalists come in and other big capital providers. I am just going to put this slide totally up because we're not going to talk about it too much. But I also want you to know that when you are asking for money, you know that there are different types of capital. And when you're asking, you should ask of those who do those kind of capitals. Because again, if you ask in the wrong place for the wrong thing, you're not likely to get it. So the differences between capital instruments, mainly equity. So if you come and say, invest in my company, not lend me money, this is what it's going to mean to you. We need to find out a valuation. Because if I'm investing in your company, if I want 50%, we need to know the value of 100%. And this is where ladies have a problem. I will not call, I've asked the question, why are we not pitching? Is it because we don't know you could pitch? Or is it lack of discipline? Or just lack of knowledge? When it's got a life of its own, it goes away. When you, when you are asking for equity, you have to have the discipline of valuation establishment. Somebody serious needs to professionally evaluate what you have and value it so that we know how much of it we're taking. It increases investor control because they're likely to come on board. So you have them on your board. More discipline. And then it mitigates investor risk. I mean, if I'm on your board, it means I can tell when things are going wrong quickly. So my risks are mitigated. And it definitely dilutes your ownership, so you cannot have 100%. The issue of dilution is a big problem for most women. But I keep asking people if they feel that having 100% of a mangy little thing was better than having 5% of a huge thing. Give me 1% of MTN. I like that laugh, so you understand it. But when it comes to pitching and asking for capital, I don't see that understanding in women. I will go to some of the pitches, and I'll tell you what the guys out there are doing. And I was telling one of the First Bank directors during break, and I'm saying that ladies are still at the point of asking for mangy little capital. And it's a problem for investors. Let me tell you why it's a problem. If you came to me and said, Mr. Oyetunji, invest 5 million, really? I'm thinking, where are we going with this? This is just trouble. She wants a dash. She's not asking for capital. And even if she was asking for capital, do I want to put the effort of chasing somebody who has my 5 million when it could be in treasury bills? Why? Why do I want to take that trouble? Unfortunately, there was a senior lady, probably about my generation, who'd been running a business for a long time. If I told you the industry, the people of my generation will quickly know who. And she'd been running this for ages. And she came through a friend at KPMG to approach me for capital. And when they told me how much she was looking for, I said to a common friend at KPMG, I said, I hope you know this is trouble. Me, I am not investing. I said, all these years she's been running the business, her ask is this amount of money. The best I can do is let both of us meet with her and find out exactly where the business is at and why her ask is so low. So when we met with her, I asked the question, why is your ask so low? She said, Funmi, you're saying exactly the same thing that private equity houses told us. Because she'd been running the business for a long time, she thought she could go to private equity. Private equity looked at the ask and they thought, the same thing I was talking about, 5 million. There are certain amounts of money that is not worth the trouble of investing, checking the investor, monitoring the investment, looking for it is just not worth it. What is the yield I'm going to get from this thing? And then after some time, they see you at parties, they don't greet you anymore. Why? Because they're not preparing accounts. So there's a big problem in that area. And guess what? Very young boys are coming to pitches and asking for serious money. Boys, they come to pitches and say, our ask, they start, very cool. Our ask is $1 million. I like the laugh. But guess what? Sometimes we argue them down to 50%, but they get it. They get it. Because the people in the room are not interested in total investment of less than that amount. Because we're in the room as a group, it's the whole group that's going to take that amount. So if 5 of us are there and he wants a tiny ask, are we going to be squabbling? And then for each person, it doesn't really mean anything. Ladies, I'm not saying just go out there and ask for $1 million. You need to have a valuation and substance and value that is worth that amount. I'm just helping you to dimension the fact that running a business, getting it big, and letting it be attractive to investors is beyond you and your little passion sometimes. So debt capital, unless capped, you don't have to do a pricing. You want to borrow 20% per annum, we do the calculations, we do, even the documentation is very, very easy and not expensive. It's fast to negotiate. We can go by the side and negotiate if I know that I'm covered and that my capital will not grow legs and walk. Usually there are no board seats. This can affect cash flow because if you borrow, you have to pay interest. If you have covenants of capital repayment, you have to pay. So the point of equity, and if people understood it, is probably one of the cheapest ways to grow if you find like-minded, interested investors. And if you're willing to be disciplined. It's the only, you know the word leverage. You're growing without leverage. You don't owe people. All of you are in it to make good of it. And I say to SMEs, why don't you even want to share the stress of that business? Because I know there's a thing that I've just been invited to. I found my financial inclusion KPI. Again, it found me. I just landed and a male friend called me and said, this thing, I'm putting my money in it. Funmi, I want you on the board. I don't care if you don't put your money, but I want you on the board. So I said, I'm interested. What is it? Can they send me the papers? Anyway, that's, again, how my financial inclusion found me. So you see, nobody had to beg me for capital in each case. I was looking for investable assets. So debt, you understand debt. You've used banks. You all understand debt. So that's the difference. Now tell me why SMEs and small businesses don't want to look for proper capital and be disciplined to take capital. By the way, this last company, Financial Inclusion, they are not taking people's money who cannot also provide mentorship and skill sets. So they are choosing who would be on their board, who would give them money, because they know that they want people who have the understanding and who are not going to be every 3 months looking for money. They know these are people who have a budget for investment, and therefore they understand timelines, and they would have discussed those timelines before they place money on the table. So, but they were insisting. It was interesting when I saw if I'm invited onto a board, especially if it's a private board where I don't know the name from the public. I go, who else is on the board? I don't need a board where we're going to either be going there to waste time or altercate. So I would usually ask, who else is coming on the board? And when I heard the names, I wondered, I won't tell you the company, but Doyin Salami was also there. And once I heard certain names, I knew, okay, fine, let's go. I can deal with those. But do you know what? They have 5 people on that board that it will cost them so much. It will cost them so much on their board that it will cost them a lot to have that kind of expertise if they were paying consultants. So what have they done? They have a value proposition that meant we are able to put money in their businesses. By the way, I'm going to give you proper examples and tell you what has happened there so that your minds can be open to possibilities. This new company, by the way, there are 2 sources of capital. You could do a loan note, or you could do equity, or you could do a combination of both. And so you knew that these were guys who understood what kind of capital was needed for what. And it also meant that those they invited were managing their own risks by saying, okay, fine, I'll do half loan note and I'll do half equity. Loan note, it means on a quarterly basis I get some yield, like treasury bills, and then I have my capital back if I give you a week's notice. Meanwhile, equity, we've all talked about the timelines and the possibility of a liquidity event in 5 years. So we all know that, don't ask questions. Well, we ask questions, but we're not going to get liquidity. So we're not going to be broke and go to them in 5 years. So there are all kinds of types of capital and combinations that you can use for different things. But you know what, ladies? I think you need to educate yourself more. I thank First Bank again, because the kind of discussion we're having now, you would not meet in normal training classes in Lagos. You would be like traveling half around the world to talk about the kind of capitals and how you ask for capital. So it's wonderful that you're here and listening to it for free. I suppose that is First Bank CSR. So, having put all of that out there, what do investors look for when you come to them for capital? First of all, I'd like to say to you, there are 7, if you came to me and said you wanted capital, I'm going to be trying, either I ask you directly, or I'm going to be trying to identify what stage you are, and I'll give you 9 stages that investors are looking for. The last stage is exit. Does everybody understand exit? And I hope nobody here thinks exit is a bad word. Because even for you running a business, you should have an exit strategy. The reason all the family businesses that were here 40 years ago are not here is because they didn't understand exit. People had serious money, serious money, but they just sat there while the money just went, either through exchange rate or the fact that the economy changed. It changed. Even in America, the revolution changed from manufacturing, and now the richest people are people who are using technology, deploying technology. It changes. And therefore, if you do not have an exit strategy clear in your mind, you will lose money by and by. The reason why my board called me 3 years ago and said, Madam, you've done well with real estate. We need to find those businesses that are going to take us to where we want to be. percentage of our balance sheet used to be like 90 something percent real estate, and they've just told me push it back. We don't want it to be more than 70%, knowing that it's high value assets that you hold, but knowing also that illiquidity and exits might be difficult. So the last stage is exit. The first stage is the establishment of the founding team. When you get up and decide to run a business, whether you're one of you or two of you, you're a team. Number two is setting the vision. You know, for those of you who would see my book out there, I'm a chartered accountant. I don't know how I went to write almost a philosophy book, but I found that philosophy affects every aspect of our lives. Envisioning is the biggest thing in the world. Whether you're an investor, whether you're a business, it's envisioning. And we're all ladies here will tell each other, I've told you that I don't see you at pitches. Now I'll give you another. You don't envision big enough, guys. I call you guys, but I mean ladies. Your vision is always about that little cottage business, and you're sentimental about it, and this is how I want to do it. And if you remember in Lagos, I can't mention names, but people know the first fast food shop that first of all did fast food and was popular and bull market. The only way you validate that for me is evidence of sales. You can talk to me from here till tomorrow. If we don't have the people who are willing to buy at the price we're willing to sell and at the volumes that will scale us ultimately, you cannot interest an investor. The fifth stage is proving a profitable business model. You know, sometimes when you're running a business, you already validated that it's an investable market out there. But you do not, it's by and by that you hone the profitability of your business model. You can have a shortcut by going into your industry and finding out what the business model should be like. But like everybody says, everything in Nigeria is different. So the business model you find on the internet might not work in Lagos, but there are people who are doing the same thing here. So you need to prove your business model is profitable. I say many people, many ladies run businesses. They look very good from outside, but all they're doing is meeting the objectives of the people buying from them and the people who are earning their salaries from them. You cannot see the financial objective they themselves are meeting. So if you don't prove a profitable business model, you're busy, you're working, everybody knows you're working at this thing, but we're not quite sure where it will lead to. Definitely it's not going to lead to much assets being created. Then moving beyond early adopters. So if you came to me and I say, and you say you wanted to invest, and I say, have you moved beyond early adopters? I'm saying, so when you started, a lot of people showed excitement. Have we gone beyond those people? You know, ladies, most of the time when you start making a bag, you start making hearts. It's us, your friends, those of us you already know that you bring into a room. And on that day, we buy. Half of us are buying, so it will be said that we bought. The other half really like the stuff. But you need to prove to the investor that you've gone beyond those early adopters, so that it's people who don't know you, who just need that solution. And then scaling up. Scaling up is an interesting and my fave. That's scaling up is the reason the capital ask, investment ask of ladies remains small, because they are not managing to scale up. I don't think it's laziness. I think we just run businesses, and it might be that we're actually afraid of scale. We might actually be truly afraid of scale. You're just thinking, so if I scaled, so I will have to travel to Abuja too, and I will have to, and then I'm happy, God is good, I'm doing well. And if an investor comes and does not see the desire for scale, it will put them off. Because, again, as an investor, I'll be meeting your objective of God is good and you're fine. And so the problem will be there is not ever going to be big enough yam being cooked for me. 5 minutes. Okay, let me jump away and quickly go to. So what are we looking for in teams? We need to see that the team itself understands its target market with very strong industry knowledge. So like I said, if I listen to 6 sentences of yours, I can tell that you know your target market. You have a deep understanding of your target market. Investors like to see a team of at least 2 of differentiated skill sets. We like to see that. We know there's one person that came with a passion and can make the hat, but somebody needs to be able to do the finance and understand sales and understand marketing. We need, so when you approach an investor and you're the team of 1 with the passion, it scares. We want to know that the team, I've spoken about some of it before, we want to know that the team has the ability to actually support another growing team to scale. So if I asked you a question, where do you see this company in 5 years? If you cannot articulate the fact that there won't be 3 of us, there will be 15 of us, and my job would have changed from, hands in the pie to managing the systems, then scale becomes something that we know you might not understand. Then as we go to maturation, we also want a team that is understood or known in their industry. So if we ask, if I'm doing food or I'm looking for fashion, if I ask for you in your industry, I should be able to. This thing is gone. Let me keep talking. So, apart from the team, we look at the problem solving and vision. We need to identify a big, large, important problem that you are solving or you seek to solve. You need to be able to tell me why you're the best at solving it. And you need to give me a strategy of how you're going to solve it continuously. You see, I'm trying as much as possible to put it in everyday English. If you are telling me that you are going to solve the problem in Ikoyi of, say, and this is a true problem, all the what is it called? All the eateries and restaurants are in VI. If you live in Ikoyi, on Sundays, unless you go to the food fair of the hotels, you can't find all the little cute restaurants. There are not many in Ikoyi. Maybe there are 2. I have a friend's daughter's one, but you can't go to the same restaurant all the time. So you need to tell me that you identified a problem that you're solving and that there's a market for it. As you want a bigger ask, because I talked about a big ask, as you want a bigger ask, I would need to see evidence of the impact of your solution in terms of sales, month-on-month growth. Do you know the beauty about month-on-month? I'll give you a little tiny example before I go. Somebody sent me some papers about some investment, so I sent it to my son, the one that's the investment banker. Again, I use him as consultant that I don't pay. And he said to me, I see that they are meeting their target and their forecast. Why are they surpassing forecast? Do they know why? Because even when you are surpassing forecasts, you need to know why, and therefore plug that hole with probably more of your product. Then he said, their cost continues to be low. I can see that their staffing is low level. Is there going to come a point when that business needs to actually hire serious people who have to be well paid? Is the market able to support that? So, your problem solving and your understanding of how it's going to go, I need to know it. I've talked about value proposition. Who are you? What's your proposition? And you know what? In identification of your target demography, the problem, you have to prove to me that there's a problem that is being solved. You know that there's a difference between multivites and painkiller. Yeah. So if this need is a pain point in a demography and they would pay to heal that pain point, it's very, very different from nice to have. Nice to have is multivite. Which is why, if after some time, this dress, after some time you just think, okay, you know what, I got enough. Or I went to walk through the fashion show just to walk through the fashion show. While about 2 weeks ago when I went to a fashion show, there was going to be a wedding. And then I suddenly found out that we were going to have to doll up, not do Iro and Buba. So when I walked into that fashion place, I was looking for the headdresses. That was my pain point at that time. It's very different from maybe if I saw. So you need to prove to me that you're healing a pain point. Your product has to be a painkiller for someone, not just multivite. And for that person that will pay your target price. Because you see, I have seen niches where there's a small group of people who would pay the target price, but it was never going to get beyond that. So what happens? The businesses remain niches. They're just niches. Again, a long time ago when I just relocated to Nigeria in 1992, there was only one hat place inside New Ikoyi. Now everybody is doing them. And that little hat place has not really changed, has not really gone far. Oh dear, Adesua is walking towards me, and she's telling me I need to finish. Business model, you need to show me your business model. This is where accountability comes in. Most women cannot give you their account. They just want to give you their account. I don't know why. I don't know why. Why? Is it because they have not been prepared, or because you're just being secretive, or you're just not accountable? You can rarely get figures from ladies. When boys ask, if you say, where are your figures? By 5 p.m., something arrives. It might not be perfect, but it arrives. With women, somebody also told me during break, she said she asked for figures 3 years ago. 3 years ago. So investors can tell from a mile off that that's going to be a problematic investment. Okay, so that's the business model. Month-on-month revenue is meeting industry standards. Your forecast must go with industry standards. So the fact that you make increases of 10% and you think that's good, if your industry is doing 20%, I know something is the matter. So, proposition. Okay, since she's sending me away, we've talked about scalability a bit.
Funmi, I'm not sending you away. The truth is, once these people become first gemmers, they will have access to everything that you've said.
Exit.
So,
I don't have that on the slide. Let me tell you about exit. It's the last thing, since I'm going to exit after this. I told you exits are not a bad thing. Investors like to find out when they can exit your investment. Even private equity, they would ask. They have exit time. I'm not your family. I'm just investing. Even if I was your family, I might exit to go and use the money for something else. Okay? So, can you build exit into your pitches if you have pitches? Explain. You know how you build it in. You won't say, oh, you can leave in 5 years. Don't say that. But you will say to them, we can have a liquidity event in 5 years. And if you want to liquidate some of your investment, it's likely you'll be able to liquidate it at times X. That interests an investor. If you told me that in 5 years I can go out times 5, I'm waiting for 5 years. And I know that you will work towards our value becoming times X in 5 years. You have thought about it. Thank you very much.
A round of applause for Mrs. Oyetunji.